Hi everyone, it's Ryan Grant here with Benchmark Mortgage. We are releasing a blog right now that is talking about should you wait to buy a home and kind of the status of the market. So we've been fielding a lot of questions with the recent interest rate kind of upward tick in the market on is now a good time to buy a home and what's going to happen with housing prices. So we wanted to give some information to our clients. So one thing to keep in perspective is even though interest rates have moved up into the 4% range, they're still historically low if you kind of look at the last 4 decades. In 1970, rates were around 8.8% on average. In 1980, they moved up to an average of 12.7%. In 1990, they moved to an average of 8.12%. And in the 2000s, rates were at an average of 6.12%. So where we are, even though we're not in the historically lows where we were last year in the 3% range, the 4% range is still an amazing interest rate that is going to be a significant wealth builder over time. One thing that a lot of clients are worried about is, are rates going to affect housing prices? If rates go up, the common consensus is that it'll become more unaffordable to buy a home and housing prices will come down. We actually really wanted to get some more clarity on that, so we did some research, and the last 4 interest rate spikes that we've seen have actually all yielded higher home prices. And the simple reason behind that is, especially now, is that as home sellers own a home now, they may not want to move into a higher interest rate. So they have a 3% now, they may not want to move into a 4 or 5% on a more expensive home. So there'll be less inventory, but there's still a significant demand from the buying market. There's the boomerang buyers who are coming back from credit derogatories. There are your people that have been sitting on the fence that are now kind of getting into the market because rates have started to move up for the first time in quite a while. And then there's your millennials, which is 75.4 million Americans who are pushing their way into the marketplace, age 25 to 35. That all of that, those 3 populations are going to create a high level of demand. So with small inventory, it's going to be difficult for housing to pull back. We looked at 4 things, 4 different time periods. One was in 1983 to 84. Rates went up and housing prices went up 6.6%. And from 87, in the 87 increase, rates went up 5.2%. In 93, when interest rates went up, housing went up 1.2%. And in 99 to 2000, when rates went up, housing prices went up 10.9%. As you can see, population growth being exponential is going to create high levels of demand, and lack of inventory will do that. So take a look at the blog. Let us know if you have any questions. We've put out an analysis on there as well, so you can see kind of an estimate of a $500,000 purchase price, what that would mean if you bought it at today's rates versus what would happen if rates went up 1% with no home price appreciation, and what would happen if rates go up 1% and prices also go up 5%. So take a look at that. Call us if you have any questions. It's really important information to share with clients if you're a realtor, if you are a client. It's really good information to look at for yourselves. We want to be cognizant of not missing your entry point into the market and being priced out of the market in years to come. So it's something that we really believe in. We want to educate our clients on, get them motivated around home ownership, and ultimately confident in the decision to buy a home. So call us if you have any questions. You can call us here at the office at 949-651-6300, and we'll look forward to chatting with you soon. Thanks so much.